Welcome to another Coffee with Samso, where we speak with ASX companies and the guys who run these companies. We're here at the University Club here in Crawley on the University of West Australia campus. And we've got Mount Ridley Mines Limited here. ASX code is MRD. Market cap as we speak is around 27.7 million. And we've got Guy LePage here today.
Thanks for having me, Noel.
You've been with us, almost 6 months ago now.
That's right.
In July. Mount Ridley is all about rare earths. Look, since we last spoke, Guy, a lot has changed. The market sector has actually picked up in some degree. Can you give us a refresher of what Mount Ridley is all about and your thoughts on the market itself?
Sure, thanks for having me, Noel. It's good to be back. Since we last met 6 months ago, at that time we'd processed about 800 samples at Mount Ridley, which is the old air core drilling that was completed in over 2014 to about 2018. So we went back and revisited that data and found there was rare earths in there. Since that time we've done another 20,000 metres of drilling and expanded that footprint, so we've now got an area that's somewhere between 30 and 35 kilometres long and 15 to 20 k's wide, plus a whole series of other important prospects like Mia and Fabian that are wide open. So that's what we've done since. We've learned a lot more about rare earths in the southwest. There's been an association or a group formed with the other explorers to cooperate on metallurgy, which is pretty encouraging. But we're starting to unscramble the egg and work out where the high value minerals are and what the mineral associations are, the associations of the heavy rare earths with the big intrusion, the gabbronorite intrusion, and also with the felsics and granite. So certainly come a long way.
I mean, when we look at where you guys are, and you've got this map on your presentation which shows quite clearly, there's about 8 companies or so that sort of dominate this land position there.
Yeah.
And there's probably not too many gaps in between now.
No.
And since we last spoke, that has sort of become more and more. Do you think this is like the new province that's happening there? Why the sudden rush there?
Well, I think it's an emerging province. A lot of people who are quite bullish believe it's going to be like iron ore is to the Pilbara, that rare earths or clay-hosted rare earths in the southwest could deliver something similar. It's very early days. We haven't unlocked the metallurgy. We've certainly identified a very large body of mineralisation, and there's going to be billions of tonnes in resources in the southwest. I think what everyone's waiting for is for the companies down there like Mika and Odette, who floated around mid-year, to unlock the metallurgy and prove that we can convert a resource into reserve, and it's actually got some economic benefit.
I mean, the analogy that you said there about, since it appears to be like the iron ore of the southwest, I mean, that's quite true in the sense that if all you guys, because I can see OD6, they've got decent volumes going to be coming up, and you guys, like, the consistency seems to be there, right?
Yeah.
It's, as you said, the key is the metallurgy.
Yeah, that's right. Now, I think the original thought with these are ionic clays similar to what's mined in China. And those ionic bonds are quite easy to break with ammonium sulfate. What we've found is, and I think the other explorers in the region have found as well, is that the mineralisation is predominantly chemisorption, so it's a product of supergene weathering. So it's concentrated, moved up through the profile. So it's a little bit different from what we're seeing in China. It'll require different processing, but we're hoping acid leaching under atmospheric conditions after beneficiation, and I think the beneficiation will be the key, one of the keys to making this whole province work.
When we think of rare earths, especially for us in Australia, it's a fairly new commodity, business sector, whichever word is best to describe it. And we're finding new stuff, right, and understanding. Is what you guys have, is it new, do you think, in the ways? Are we moving into an era where we're going to be a supplier of rare earths?
Well, I think if you look at the progress that Lynas have made, obviously the big news is that new refinery, which will be online next year, probably late next year now. You look at the progress that Hastings are making, and a number of other developers. I think they're showing that we can do it. The big thing is going to be the downstream processing, the refining. That's an unknown, but I think it is new. I think there's two parts to it. There's the hard rock, which I just spoke about. The clays is the big unknown. No one's really dealt with clays. Most of the explorers and myself have never held a piece of yttrium or neodymium or dysprosium. It's very new. As I said, we're unlocking the geology, but the market really wants to see the metallurgy. Can we get it out?
When we think rare earths, we think, okay, all the guys like dreadnoughts and all that, they're hard rock stuff, right?
Yeah.
They're chasing the carbonatites and things. And in some ways, it's quite hard to define in that sense. Whereas you guys at the clay, it comes like spodumene against the lakes for lithium, right? Kind of that analogy comes to my mind. And it's always also been the unlocking of the metallurgy in the lakes as well. And is this, I mean, we talked about the province down here, right?
Yeah.
Do you think it's easier to do clay than hard rock?
Well, I think the hard rock processing flow sheet's a lot more advanced. Clearly they're mining light rare earths through Lynas and processing them. The clays, that there are no operating rare earth derived clay mines in Australia. They just don't exist. We're putting out resources using a 500 ppm cutoff, but what is an economic cutoff? Well, we're actually gone a little bit further than that, because we've had about 2,000 samples. We've got an in situ value of about $54 US a tonne. So that's something. That's a real number. Most of that, just under half, is neodymium dysprosium. So, neodymium praseodymium. So we know a couple of things. They're the high value minerals. That's a reasonable amount of data. Now we've got a lot more samples to drill, but we're starting to get an understanding of what it could look like on a per tonne basis. So we can work backwards from there and work out, well, in an operating situation, what does that grade need to be? Do we need to beneficiate it to a basket price of $100 a tonne US? And therefore, what are our reagent costs? So we're starting to get a very high level understanding of what we need to do.
In terms of the economics, I mean, we're talking about economics. I think we're not saying, oh, you need to go find yourself a rare earth deposit.
Yeah.
I can see in yours, you have two sections, one on Butch and one on Mia.
Yeah.
And it looks very consistent in terms of like depth and the grade. I mean, as you say, we're not sure which is the grade that's going to work.
Yeah.
But to me, it looks like coal, right? One long coal seam. The bigger it is, the better.
Yeah.
When you look at the results coming out OD6, and they're getting that kind of consistency, do you get that? Is that encouragement for you that you guys maybe all mining a coal seam?
Yeah, it looks like it's potentially a large mineral sands operation.
Like a big basin of rare earths.
We originally thought it was all transported. It was part of this sort of Eocene egression, regression, with the sea coming in and out, picking up all the rare earths from maybe the Yilgarn and dropping them. But turns out that's not the case. It's all basically in situ. So it looks like a very large flat layer of mineralisation. So yeah, it could be a big bulk mining operation. We do see differences though. We're seeing an enrichment in rare earths in that big intrusion we've been drilling, the gabbronorite intrusion, and we're seeing a depletion in rare earths in the felsics and the granites. So we are starting to see differences, and they might behave differently in a leaching environment, and also they might beneficiate differently.
Again, back to your presentation, I like you got this REO type breakdown. Can you explain that and talk that through? Because I'll have that up for people to see.
Well, if you look at a lot of the companies are quoting total rare earth oxides, which is obviously includes cesium, lanthanum, a lot of the light rare earths. Moving into commercial situation in the next, hopefully 3 to 5 years, it looks like the market's going to be an oversupply. So what we're more interested in is the MREOs, the magnet rare earths, and the heavy rare earths. So neodymium, dysprosium, praseodymium, terbium, because they're the high value minerals that are really going to, I think, drive the economy. You know, wind turbines, electronics, and strategically they're important because China is the biggest producer in the world, and there seems to be a move by the West to secure critical metals, so of which they are the critical metals.
The geopolitical issue, I've always said it, whether my narrative is
Yeah.
right or wrong. I always said, look, if there was no geopolitical issue, we wouldn't be having this conversation. And it's obviously that we are having this conversation,
Yeah.
and the issue is there. I do think that because of that, this will be sustained going forward, as opposed to, all right, we're all mates again, let's go back to where it was.
Yeah.
Do you agree with that kind of thinking?
Well, I think the thing about China is they've developed a lot of expertise in downstream processing of rare earths, and that expertise does not exist in the West to that level, in particular separating out rare earth concentrates. I think there's the issue is getting a bit clouded. Are we against the Chinese owning assets, or are we trying to stop them getting offtake agreements and financing? Because they're two different things, and the FIRB is designed around, you know, preventing ownership or reviewing ownership, particularly on strategic assets like ports and maybe uranium. So I think we've got to be clear what we're trying to achieve, because if the capital expenditure of these projects is very large, I'm not saying it will be, but if it is, you know, the last 20 years that money has come from China. So we need to try and work out what we're actually trying to do. If we're trying to protect ownership, that's fine. But we've got to bear in mind that it all goes back to China. You know, they've got the demand. They're our biggest, you know, WA's biggest client. So I think we've got to work with China, not against them.
It's interesting because there's a lot of, you know, sort of people jokingly say that China's people just want to make money.
Yeah.
They're not about conquering the world. Yeah. And if I were to look into China, and not being a expert, it seems that they just want to equalise the income levels and not have that spike of super rich and very, very poor, because that still exists.
Yeah.
The very poor still exist.
Yeah.
So, you know, in that sense, I guess, you know, with your thoughts just then, that it is, they still want to make money.
Yeah.
As long as we, from our nationalistic view, you can't own the thing, but you can buy the products.
Yeah.
I think that works, right?
I think it does. And then, you know, iron ores, we've been selling iron ore to China since the 1960s. So, you know, they are the buyer of iron ore. Why shouldn't we sell rare earths to them? Well, I don't see any reason why we shouldn't. But there's going to be a lot of pressure from the US and other Western governments, particularly with the Southwest, its location, you know, right next to a port, you know, potentially very large resources, you know, globally significant, you know, comparable to Mountain Pass, the Chinese deposits. So I think the tension's going to increase in the next 2 to 3 years to look at more downstream processing and more distribution of those products through Western countries.
Because one of the things I've seen that strikes an interesting thought is that if everybody there have big volumes and you make it work, you become a major province like the Hamersley Range for iron ore, right?
Yeah.
And you have and we all know economies of scale works, right? Speaks loudly.
Yeah.
And I think that's very interesting. If this thing works, this whole region would just blow up.
It's enormous. I mean, you know, some of the highest value agricultural land is around Esperance. So, you know, Esperance is potentially one of the biggest boom towns in WA over the next 5 to 10 years. You know, they've been making a lot of money from the grain. Fortunately, a lot of the rare earth deposits that are being explored are on Crown land or you know, marginal land. So we're not necessarily competing for the same ground. But it could be an interesting few years.
I mean, your projects is like the quiet achiever. When I looked at the numbers, you've done 36,000 metres of drilling. You've done
Yeah.
768 holes.
Yeah.
That's a lot of drilling in
Yeah.
anyone's words, right?
And there'll be, up to 100,000 metres by, mid to late next year, depending on how we go with production down there. So, and that's, we're basically drilling an area from Perth to Rockingham. It's a very big area, 35 kilometres long, 15 k's wide, and that's just the main zone. So, we could be drilling there for 5 to 10 years.
I think it's interesting. I think that's why I came to the conclusion this place could really work because OD6 is talking that kind of size,
Yeah.
and everyone else you can see the tenements there are that
Yeah.
size, and people can say you can mine iron ore from Tom Price all the way to the coast.
Yeah.
It's just depending on percentage of
Yeah.
iron ore, right?
Yeah.
So in some ways, and you got the port next door, everything seems to point. You get the technicals right, and
Yeah.
this place everyone will work. I think.
Yeah. Yeah. And dealing with clays is not simple. Clays are complex. There's an operation mining clay that everyone knows called Ravensthorpe, and it took them years to optimise that plant, but now it's working well, and that's obviously an HPAL plant. So they're not simple, but we have some of the best mines, the best labs in Australia working on this right now. So there's a lot of money, a lot of resources going into it. So hopefully this time next year we've got maybe a flow sheet, maybe a maiden resource to talk about.
Look, I guess from you've obviously, neck deep in the rare earth industry.
Yeah.
Can you give us your thoughts on what does it all mean in terms of the market, as well as what will it be in 5 years' time? We've sort of mentioned that it's sustainable. I don't know. What's your last
Well,
word?
it's very hard to know because, probably 30% of the risk is the market for rare earths, which has taken a little bit of a hit this year, but I think it'll come back. Until someone can put a flow sheet on the table that makes economic sense, I don't think we're going to get a lot of traction. I think it's fine to publish big resources and talk about, your NdPr ratios and so on, but because there's such a low level of understanding about clay-hosted rare earths, and a lot of people who, a lot of knowledgeable people who do doubt the ability to have a commercial operation down there, we really need to produce a flow sheet that means something.
So, Guy, what's the news flow for guys out there going forward? Obviously, you mentioned a few things, but what's their 12 months, 6 months view?
Well, the next 12 months, a lot of drilling data, obviously a lot of assays coming out, metallurgical test work results. That'll be a little bit slower because there's going to be a lot of different tests done, and we won't announce every single test because it's not necessarily material, but hopefully some met testing, in the first quarter of next year, maybe second quarter, and I'm hoping a maiden resource by second, third quarter next year. Again, that some of the issues down there has been access and weather, but I think we're on top of that now. We had a lot of rain in November, so it's going to be a lot of news flow, and whether we can achieve it or not, hopefully a flow sheet late next year. So we're going to go pretty hard, and you've got Mika, Heavy Rare Earths, ODET6, a lot of other companies with their foot to the floor too. So hopefully that'll give the whole region a lift.
Why MRD? Why should people be stumping up some hard-earned cash for your stock?
Well, I think at a market cap of under 30 million and potentially plus billion tonne resource, that's a pretty good start. I think we do have one of the best locations down there because we're very close to Esperance. We've got water, power, roads. We're in an excellent position. The southern parts are about 30 to 40 kilometres from Esperance, so any potential mine development I would have thought would have less of an infrastructure component being that close to Esperance. And the other thing is we've got a very high proportion of magnet rare earths in our deposit. So I think they're two pretty compelling reasons to invest in Mount Ridley.
Okay, fantastic. Fantastic way to finish. Look, as you know, we give away coffee. Give away coffee with Samso. The last time you were here, Florence Drummond has been supportive of us, and she's come up with this new brand here called Kick. It's a group of businesses that can support the mining industry, and that's
Fantastic.
your gift.
Thanks,
token
Noel.
gift for turning up. Till next time.
Pleasure to be here and look forward to an update next year.
Great. Thank you.
Thanks, Noel.